Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session the market pretty much balanced within yesterday's range, and at this point heading into the open, the market is again in a very balanced state, and it can tip in either direction. But because it's in such a balanced state, there is potential for a directional move this morning. So on the downside, 52 quarter to 54 quarter is pre-market support, and we have yesterday's low at 50 quarter right below that. And on the upside, we have resistance at 61 to 62 half and 67 half to 69 half. Now, short term, how the market reacts to the pre-market support and the pre-market resistance is going to help set the tone and the bias. In the event that the market breaks below the pre-market support zone, it can go directional into 40 to 42 and possibly even lower. Now, first test of 40 to 42 can attract responsive buyers, and then a break below that would just confirm that the sell side at that point is in firm control. But short term, the 50 quarter and the 52 quarter to 54 quarter zone is really going to be important for the buy side. And if that zone can't hold, then we can head lower. On the upside, the 61 to 62 half is going to provide short-term market direction. And as we start taking out resistance zones on the upside, it can just further fuel and bring more buyers into the market. So 61 to 62 half is the short-term hurdle. If we take that out, we can get a move up to 67 half to 69 half. And then if we take that out, 72 half to 74 half. Now, given the way that this market has really balanced and built structure over the last couple of days, the 72 half to 74 half zone, which also marks yesterday's high, is really going to be key. If we start breaking out above the initial resistance zone and above 72 half to 74 half, that can really accelerate the price action to the upside, and we can get a gap fill at 81 and a test of 82 to 84 and possibly even higher. So that 72 half to 74 half zone is really going to be critical on the day time frame today. But short term, we're going to have to use these nearby support resistance zones to establish our bias. So the main idea is that the market is in a quite balanced state and it can really tip in either direction. And because it's so balanced, it can go directional. And off the open, we need to be flexible and nimble with our bias and determine which way that directional move is setting up to be. A breakdown below 52 quarter to 54 quarter can lead to a downside directional move. A breakout above 61 to 62 half can lead to some acceleration on the upside. But the key zone on the upside is 72 half to 74 half, and even the initial resistance zone is decent enough resistance, but the 72 half to 74 half zone is really going to be key. So if we break above there at 77, 79, it may simply be a pause point before we go to the open gap and 82 to 84. And again, if there's a lot of upside momentum and broad market strength, then even going higher wouldn't really be out of the question. And you could tag the open gap at 88 half as well. So the market is setting up for a directional move. The volume is pretty decent, and we just have to be flexible enough with our bias and take advantage of that movement. So those are really the main ideas heading into the open. Nasdaq so far is holding up well. Russell continuing to be very balanced as well. So everything is pretty much consolidating and setting up for some directional movement. So those are the main ideas heading into the open. Let's see, which side takes over here off the open. Let's keep an eye on the momentum and the broader market, and we'll take it from there.